Hey, everybody. Welcome back to the Market Mavericks. It's Thursday, 3 p.m. Eastern time, and the three amigos are back at it again. All right. So first and foremost, right into the action. We don't waste any time here. What's the first topic you guys want to cover?
I go to Mike because I'm lost and dazed and
All right.
confused these days.
So. Okay, well,
Tell us what's going on, Mike. What are the things?
I always like to talk to a picture. I'll show my screen. There's only one thing that matters in all markets right now is if beta can keep going up. That is a wonderful thing. It's going to pull along all assets. It's just a question if the stock market, the S&P 500 can keep going up. And I'm showing you what I'm concerned about. I know I've been saying it ad nauseum, but what's different this time is one thing I really do is show a 50-day, a daily chart, but I'm showing the S&P 500 E-minis pumping above that 50-day moving average, which is a wonderful thing. But one thing that's different, the last time it jumped above that 50-day moving average was at the end of November. That was the big pivot. At that time, Bitcoin was leading the way. The Bitcoin gold ratio was in a good upward trajectory. Now it's the opposite. The Bitcoin gold ratio is heading lower, and it's showing potentially that maybe we'll see who wins. We'll see if beta can drag along all assets. So to me, of everything that matters in markets right there, I think if every trader's watching that, because I'm seeing peaks in crude oil, I'm seeing peaks in copper, peaks in two-note yields, looks like they peaked at 5%. And then we all seen this data tilt that's tilting finally a little bit towards that pendulum that swung way too far towards no recession. It's just starting to swing back a little bit. And we're seeing the Fed saying, yeah, they might be easing, but the issue is I don't think the Fed's going to ease until the stock market tells them to, which means that's the conundrum. To me, everything else is about a 4 or maybe a 6 on a 1 to 10 scale. This is the number one thing that matters in markets right now.
So a quick question. So one of the things that's kind of surprised me over the last couple of weeks, we saw GDP come in weak. We saw compared to what expectations were. We saw non-farm payrolls come in weak. Today, jobless claims spiked up to 231,000, which is the highest number since August of 2023. And so is this now the pivot in the economic data where we should be going in expecting weaker numbers? And basically, are we going to price in a recession? I mean, is it going to switch from a soft landing, perfect, everything's perfect, to now a recession?
Yes, if it were that easy, because that's the way I look at it right now. If I was a trader, I'm pretty sure I'd have shorts in crude oil, maybe in copper, and longs and other things. I have to be careful saying, because I don't give investment advice. I'm still very bullish gold. But what's going to trip that up? And to me, that's the key thing that's happened. This tripped up this scenario of the pendulum swinging way too far towards recession and lower risk assets at the beginning of 23 was wrong. And we flipped back way too far the other way. Now we're starting to tilt back now. And I think this is the big one kicking in. And reason I say that is I tilt over to things like volatility. I just can show you simple things on volatility in the stock market. That's why I show you this orange line. This is just the VIX volatility index 52-week moving average minus T-bill rate. It's bottoming from the lowest level since 2007. I have to mention that because that was my best signal for the 2008 crisis. I was early. Some people were going to say I was wrong. It was mostly PA, but it was one of my best trading years ever, only because I just went with this reversion. Then you see things getting that are clear signals of global deflationary recession. Bond yields in China, government bond yields in China are the lowest in our database. They're more than 200 basis points below the U.S. right now. And then you just, I just look at things like copper or gold versus the S&P 500. These things are buried. And there's just a little reversion would make it go higher. So to me, that's what's happening. The macro's pointing there. It's just that now we just need inflection points. What's typically takes a spark.
Are you seeing the same things, the same signals that you saw in 07 then?
Oh, sure. Well, that's what I'm showing here. This was my signal that I used, and I was at a hedge fund and did very well. I actually left in 06. We started getting those signals in 06. And that is this orange line that's not letting me maximize, but I'll try that again. I just lost the chart. But it's that volatility on the S&P 500, the VIX index, is the lowest and interest rates are the highest in almost 20 years. And that was a signal that really kicked off back then. So I look at that as, I look at things like this. This is why I've been pointing out TLT versus GLD. They're getting buried buried. It's just that trend is getting buried. And at some point, it just takes an inflection point for reversion. And that's why I think we're just getting started with that 2 note bumping up against 5%, with the data starting to trickle negative. And then you see it anecdotally. I look at diesel demand. I've been pointing out diesel demand in this country is plunging. Unleaded gas demand is plunging. Cardboard boxes, corrugated box demand is, they're all in recessionary trajectories. And now we're starting to see the real economies trickle over. But there's so much wealth, and there's been so much wealth creation that's created all inflation. I don't think anything matters until that stock market confirms it.
Yeah, and I think one of the things that's been pretty amazing to me is we've been seeing these parade of earnings coming out, and companies are basically lowering guidance left and right. In fact, I think the stat was that it's the most lowering of guidance that we've seen since the COVID pandemic, when people were freaking out and we saw that big decline in March. Yet the stock market continues to go up, mainly because people are so conditioned to think that the Fed is just going to print our way out of this, even in spite of a CPI that's been rising multiple months in a row. So I think it's just an interesting little disparity there. The investor seems very programmed to just be like, doesn't matter, who cares if the economy tanks, but this will actually let the Fed print even more money, and then the stock market will just go higher. Is that wrong to think that way? I would assume it would be.
Well, it's the past performance. And
Right.
I'm showing you something I want to point out is it's completely wrong. First of all, it depends on what level it's happening from. So we'll just take the S&P 500 versus GDP. It's the highest. The average here is really about 1. I can do the ratio, but this is how it is since 1950, how high it is. So it's never really been that high since 1950. And you take S&P 500 versus it's a 100-week moving average. This is what I show you in white. It's just bumping up against a 100-week moving average. I just show it at the same time as commodities are rolling over. This is what's changed. And here's the key thing I wanted to show you. I'll end with this, is you keep talking about cash rates, people talking about high cash rates. They're actually very low because it's classic human nature. So here what I show is your total amount of cash, money markets funds, is widely quoted around $6 trillion. But if you look at the market cap of the NASDAQ, around $28 trillion, it's only about 27%. It's almost the smallest in our database. And I can go back to the 80s in this. And I like to compare that to what was it right before the crash, about 115%. And that's NASDAQ. So this is what classically happens in human nature. People expect the past to be when you all agree in the same thing, typically doesn't happen. That's a quote from Benjamin Disraeli, former Prime Minister of the UK. But that's what people are using for the comfort. I remember hearing that in 2006 and 7 when the housing market started to tilt over. Oh, we've never been down that much on a one-year basis. Well, that's what happens when you have that groupthink. You got to worry. I just point out the facts. Is cash levels are so low because it's the human nature. If you're not in it, you're falling behind it. At some point, you're supposed to look for alternative assets. And that's, to me, part of the reason gold's outperforming. I think people will be looking for Bitcoin, but then you have to worry that Bitcoin does have a much higher volatility when we do get that. That's a normal drawdown in a bull market. We haven't had that yet for not for Bitcoin. I'm talking about beta.
Scott, so turning our attention to Bitcoin, number one, the price action recently has been kind of muted, right? I mean, it's this kind of consolidation, I guess you'd call it consolidation. And you were just mentioning before we started the stream that some of the regulatory stuff is getting kind of crazy out there. And you want to just kind of give everyone a rundown of what's going on there? Because I don't know everything here.
Yeah, first of all, not unexpected that it would be muted right now. I've said it 1,000 times. A lot of people have said it. This is exactly what happens in every single halving cycle, and every single time people seemingly are surprised. But you generally have the halving. There's no more catalysts. The supply reduction doesn't really matter immediately. And then you get 4 to 6 months of extremely boring, choppy, down, up action before things go up. I don't know if that will repeat, but if it ain't broke, don't try to fix it. So people have been expecting Bitcoin to continue up. It's showing right now my point that it's generally an uncorrelated asset that just does its own thing. And you can see that. First of all, I mean, if you are really worried, that kind of looks bull flaggy, right? So yeah. I don't think that's a very big deal. It's catching a bid here on the 100 MA. And, that's kind of acted as support basically since the 20,000s. But I mean, look at the Qs, kind of bull flaggy, big cup and handle. SPX, kind of bull flaggy, retracing the entirety of these drops overnight. I mean, everything just kind of looks bullish. Gold, same thing. All I see is bull flags literally everywhere. But diving into Bitcoin itself, you would expect this choppy sideways action. even if we have days where SPX is up and the Qs are up just like today. As far as on the regulatory front, it's been insane. And it's not getting as much news because people don't talk about what's happening, but the SEC and DOJ have come after self-custody. The FBI has come after self-custody. The IRS has come after self-custody. This isn't just an attack on altcoins anymore. This is an attack on self-custodying your Bitcoin, meaning that you will buy a BlackRock ETF and you will like it if you want to own Bitcoin in the United States if this continues in this direction. Biden today, I mean, crazy, actually yesterday, said that he would veto an order that's about to pass through Congress and the Senate, bipartisan, that would allow simpler custody rules for real banks to custody Bitcoin. Really insane. Like BNY Mellon and State Street, the biggest custodians in the world, want to custody Bitcoin. But right now, the SEC had passed a ruling that they have to treat it as a liability and not an asset on their balance sheet, meaning that if they custody Bitcoin for someone, they have to custody an equal amount of cash to offset it on the balance sheet. It's ridiculous. You would think that anyone rationally in this space would want State Street and BNY Mellon to be able to custody Bitcoin for them with full insurance and all of the beautiful things that come with having it in an insured bank. Whether you believe that or not is up to you, as a Bitcoiner. But Biden said he's going to veto it. And at the exact same time, Trump came out exceptionally pro-crypto yesterday for the first time really ever. He said, Biden doesn't understand crypto. If you're pro-crypto, you have to vote for me. And Ryan Selkis from Masari up on stage with him. I mean, absolutely crazy. I don't believe a word generally the man says. I think he's trying to buy votes from a crypto audience, but still there's a line in the sand, and Biden is just, burning any chance down of getting this audience to vote for him. It's crazy.
Yeah, I think that is wild too. It's definitely being anti-crypto is going to lose you votes, and vice versa. Trump realizes to be pro is going to get him votes. Do you think that if Trump wins the election, that his bias or would it change? Like once he's in that presidential place again, is he going to have to be like, no, we can't do this because it's risky to the dollar or any of these other things?
I don't think so. I think he just doesn't care about any of it, right? I think he'll say whatever is popular. He's selling NFTs, right? I mean, the guy is literally selling NFTs. I don't think he would see it as a threat to dollar. I think he has a lot of Bitcoiners now in his ear. Vivek Ramaswamy obviously is a huge proponent. I just think it won't be top of his priorities, but at the very least, listen, I am not getting political here. I have no love for either of these guys, but I think it's pretty clear that there would be no Gensler. And Elizabeth Warren would not be the most powerful senator on finance if Trump won. So, if that's your single issue and that's your thing, hard to argue with which person you would vote for. I think there's other issues worth voting on other than crypto policy, but that's up to you.
One other thing I heard earlier this week that I was curious as to your opinion on was that FTX, the money that's there is actually people are going to actually get back more than they had in there at that time. Is that not true? Is that what
they're going to get back in full what they had in there at that time? But that means pinning all of your payback to the value of your crypto assets at the dead bottom of the bear market. So if Bitcoin was 17,000, you're going to get paid back the dollar equivalent of what Bitcoin was at 17,000. Bitcoin's now, about 62,000 last I checked. So you get none of the upside, but still a better situation than any of the other creditors. I mean, I was a Voyager creditor, and we got pinned to the bankruptcy date, which was July of that year. So $19,000 Bitcoin, we got 34% back.
Oh, wow.
Right. So, I mean, it's still 3 times better than what happened for Voyager creditors, which is nuts because last I checked, Steve Ehrlich hasn't been charged with anything, and Sam's already sitting in jail for fraud. But they did a objectively good job at recovering a ton of assets for the FTX estate. Hard to argue with that. But yeah, it's nonsense. It's actually almost sinister when you look at it that nobody captures any of that upside. Now they have more money. So a lot of that, they're selling off Solana at $60, doing OTC deals just because they can instead of paying people back more, and all of the upside went to the hedge funds who are getting to buy these things and the VCs and all the bankruptcy, and it doesn't go to the customers.
Does that pose a risk to crypto at all? Like the fact that they're going to be unloading all these Solana tokens or anything else?
I think they have. Well, the Solana tokens are locked, but I think the bankruptcy estate, to my understanding, is getting whole in dollars. So whatever they've been doing has probably already been selling off most of these assets. And then the Solana will go into I think 4-year vesting for these VCs that are buying it at $60. So there's some risk there to them, to be honest. I know a lot of people who passed on that deal, but those are going to vest very slowly.
Gotcha. Wow. Interesting and really good update. Thank you. So turning back to, let's say, oil, let's look at the commodities, right? So we've seen gold inching up today, but gold's off of its highs, Mike. Oil to me looks like it's getting ready to break down, which kind of vibes with the outlook of what the economy's now. It's looking a little weaker, right? And if the U.S. economy stalls, you got to figure oil takes a big dump, right?
Yeah, I think I'll show you on the chart. I don't think it's coincidence that oil peaked around 87 in April at the same time the 2-year note peaked around 5%. Go back to like September of last year when oil peaked around 95. I'm talking WTI, about the same time the 2-year note peaked around 5%. Here we are. I'm showing a way back chart. Here's a 2-year note yield at 5%. The last time we really were above that was right at the end of 2000 and mid 2007. That's why I point out the interest rates are really high and volatility is really low. We're doing the same thing right now, but oil was on the way up to the peak in 2008. That still holds $147 a barrel. Now it's on the way down. What happened here is the key thing to always remember in commodities. It's a high price cure. That Russians invasion of Ukraine, all the wars I've traded through, that's an overhang that's going to last a while because it pumped prices so high, it aggravated what's really pressuring prices, and that's the excess of supply and demand out of the U.S. and Canada, and that increasing spare capacity out of OPEC. So I think oil is going to do what natural gas did. It had to get cheap. Natural gas got cheap. It got below $2, and now it's back above $2. The low is like a 155 or so. Crude oil, to get cheap, it's got to get below 50. It's typically what it does, but I think it's all going to come with just 2-year notes potentially peaking. What's going to take for 2-year notes to go down? I don't think they go down until the stock market tells them to.
Is there any sign that the yield curve is uninverting, or is it still pretty inverted at this point?
Yeah, so I look at long bonds 461. So it's actually steepening a little bit, and then just look at the Fed funds at 533. That's still pretty steep. But then I look at that long bond, even a 10-year note at 446. Then I look over the rest of the world. Just look at China, 230. I mean, the global yield curve versus U.S. Treasuries is showing major stress, major things kicking in, and it's happening in the dollar. You see that. Why are you hearing nothing but intervention to support the value of the yen? They're not doing the other way around. Potentially in yuan, you're hearing about potential for devaluation because the dollar's breaking things. Now, this started last year. It's just getting worse now, and I don't see what stops it. You basically need a reset. And for right now, it's just, this is not going to last. Something's going to probably have to break, I think, for U.S. rates to go down, for the dollar strength to stop, because it's crushing other economies and other currencies. And to me, I told you what the key thing is. It's an inordinate burden on U.S. stock market to stay up.
So can you explain to people quickly, like, if the dollar is strong, why is gold continuing to go up? Because I think that's a common misconception that, strength in the dollar should automatically mean gold goes down, but that's not really true, right?
It's typically the reciprocal to the dollar, but that's just how strong the forces of buying in the dollar in gold have been. And you have to start with 3 things: China, China, and China. And it's just bottom line what's happening. Central banks, the news from the World Gold Council was that the central bank buying of gold in Q1 was the most ever, 290 tons. The numbers I put on it, so just over 100 million ounces of buying from central banks since 2020. At the same time, there's been 30 million ounces of selling in ETFs. So gold is being bought up by central banks, part of this de-dollarization on the back of the unlimited friendship between President Putin and President Xi. That's what changed the world order. So that's also potentially part of what I see as nothing but bullish for gold, because at some point that massive outflows in gold ETFs will probably flip back to inflows. But the way I say it is, why would any normal investor, and may say in the U.S., touch gold with the stock market on a tear and 5% T-bills? That's what's got to change. And at some point that will. That to me is why I'm still think gold is in the early days of a bull market. Now you're right, but it's showing divergent strength versus a strong dollar. It's showing divergent strength versus selling in ETFs. And there's good reason why, because the deepest pockets in the planet, central banks, are buying gold.
Interesting. Scott, just flipping back to crypto with a crossover to gold, I had heard that there's at least one crypto that tracks gold, right? Do you know much about that or not so much?
I mean,
No.
there's gold-backed stable coins that have not gained much prominence or popularity, but I don't know of one that's tracked gold particularly well, including Bitcoin. For any of those who believe that Bitcoin is trades like digital gold, it may have the properties of digital gold, but certainly does not trade like it.
Interesting. So looking at the picture out there, what have you guys seen? I mean, and Scott, you gave us some kind of real world, like what's going on in the political side of things, but like, is there more to the economic data, right? It almost seems like to me that oil is turning down, and is that maybe a leading indicator of some of the troubles that we could be facing? Because I'm still seeing like if you turn on mainstream media, you're still seeing soft landing, everything's great, stocks are going up, so who cares? Like is this something that people need to be aware of, that some underlying things are going on? I mean, Scott, do you have any views on the macro at all?
First of all, someone said Pax Gold. If that's what they're talking about, yes, there is like tokenized gold, which will trade exactly like gold, if that's what you meant. I mean, my view on the macro right now has not really changed. It's an election year. I can't imagine them letting it fall too hard, but I would not expect at all, if we saw, a retracement over the summer or some low volatility slowly chopping downward, both on Bitcoin and everything else, and then it ramps up into the election cycle. But that said, I don't see where rate cuts would be bullish in the short term for markets.
I think that's a good point, though.
Maybe I'm just dumb, but I look at history and they usually cut rates when something's broken and then the market dumps. So,
well, and history, and Mike, you probably know this as well, but historically, the market actually has a history. When the Fed cuts rates, that's when it actually starts to fall, right? It's the speculation.
Or it has started slightly and then it really gets going. Yeah.
Right. Yeah. Well, initially you get a bounce. I remember September 2007, we initially got that bounce when we first cut rates, but they cut rates when inflation was actually still going up because the housing market was collapsing because of all the CDS problems. Here's why it's completely different now. And that is, inflation is still sticky. And there's that, I think the beta to inflation in the stock market's the highest ever. And you can see that lately. Inflation's been sticky, stock market's going up. People got the wealth effect. And so, example I like to use right now, the total market capitalization of stocks in this country is about 2 times GDP. The year before, 2008, is about 1.3 times. So it's so much more a part of everybody's portfolio and everybody's life and psychology that to me is where it's the different this time. Last time the housing market started heading over in 2006, I was early. I remember when I saw that tilt over, I thought stock market would be right after. It took 2 years and then it collapsed. This time, that's why I keep going back to the S&P. It's the only thing that matters right now in the entire world economy is that thing going up. And if we just have a normal correction in a normal bull market, which means 10%, which you haven't yet, the dominoes already starting to tumble in many other markets. Like Bitcoin's already peaked, crude oil might have peaked, copper's already peaked, 2-year yields might have peaked, but nothing can continue, I think, until something. And I just think that this thing about expecting the Fed to ease and support the stock market with inflation high is silly.
But you do expect inflation, once we do enter a recession, you do expect inflation to come in, right?
So now to come in, I expect it to go negative and be severely deflationary. And this is not profound to say that. It's classic normal cycle after the biggest pump in liquidity, the biggest pump in inflation we've had in our lifetimes, and the back of liquidity that's dumping. Let's all remember what happened there. This is nothing near like the 70s. It took decades to create that inflation. This happened out of one quick event that's already been reversed. And the thing is, it did also in human nature, as Jeff Booth says, we taught us the error of too much liquidity inflation. That's never going to be repeated without major, for instance, for the Fed to start easing, the first thing that's going to come out is inflation hawks. So we can't do it. We won't unless we're idiots. And I just don't think we've that way, and particularly Chairman Powell. And I think he's remember, he's the guy who pushed back on Trump. So got to give him profiles and courage and credit for that.
Do either of you guys think that, let's say Trump does win the White House, will he curb spending and start stopping the debt from going up, or you think it doesn't matter who's in the White House?
I think these are the 2 highest spending presidents in history, right? Collectively.
What do you think, Gareth? Do you think he would actually consider?
No, I don't. But I was just curious if anyone did. I'm a big believer would be very popular. Politicians, all they care about is looking good at the time. They don't think about the future. They don't care about the future, right? So if that keeps the economy looking good, they're going to do whatever they have to do. Leave it to the next president to worry about the debt. And I think that's where we've gotten into all this trouble. But
I mean, Trump wanted more liquidity, more liquidity, more liquidity, and that's where, you know, Powell had to push back. So we know where he stands. He wants the market pump,
Yeah,
economy
that's
bigly, you know.
yeah. Well, that's a big if statement. The one thing I've come to terms with, and having read a few more books on it recently, is almost certain that it means more pressure on crude oil prices. Almost certain that weaker dollar, because yes, tariffs are typically good for the dollar, but you know he was pushed really hard before, and Fed to ease and a weaker dollar to help, help his constituents, which are mainly the ag states, you know, the in between states, of which I'm from. So all that's great for gold and potentially Bitcoin. The problem is it's that high volatility of much higher volatility in Bitcoin. That's one thing I have to point out. I just, as my strategist, you always want to look at assets that you think are good but are way underappreciated. Right now, all that ETF outflows in gold makes me still tilt towards gold. And then we had that massive pump in enthusiasm in Bitcoin. It's still the hangover in Bitcoin.
Do either of you guys view, so one of the things as a trader that I am constantly doing is analyzing risks, like what's the risk of this happening, what's the risk of that happening, and one of the risks that I'm a little concerned about is the dollar yen, right? The weakness, the dollar against the yen is just, I mean, the yen's getting destroyed, and we saw intervention. But then one of the things that caught my eye was the U.S. government actually came out and said, hey, you know, basically they warned Japan not to intervene, and is that mainly because for Japan to intervene, they have to unload U.S. debt. They sell U.S. debt, which then pushes interest rates up, and it can actually screw up the whole system here. And is this now something that eventually is going to break?
Well, the one thing to remember is about the history of currency intervention, and almost always, from a U.S. standpoint, have been to alleviate the strength of the U.S. dollar, and they'll coordinate that. The Plaza Accord was the biggest one in 1985. I remember that one well. I was in Europe at the time. And that's first of all, that was one person who said that, Treasury Secretary Yellen. But the key point that I take from this is the problem is the strengthening dollar and weakening, and every other currency on the planet basically weakening. Some of them even starting to ease, like the Riksbank recently in Sweden, and because they have to, because their economies are starting to collapse, and they see it coming. And that's where the problem is, that the Fed can't ease yet until the market tells them, and that's strengthening for the dollar, and it's bad for all the rest of the world for now. But that's where we're going.
But do you think, I mean, you have debt to GDP in Japan of 250%. We have here at 130. I mean, is this on a course that's eventually going to blow up? I mean, there's something's going to break at some point, I assume.
That's why it's great for gold. Eventually, maybe Bitcoin, but right now it's gold. Because it's the alternative currency, that the number one alternative currency. Bitcoin is still baby.
Oh, amazing. All right. What we have a couple minutes left. Scott, what should we be looking at? Is there anything in the altcoins? What about Ethereum ETF? Is there any hope for that? I mean, is that a security? Is any, you know, like,
I don't think there's hope for it during this, under this regime. Right. And so okay. I just can't see it happening. Honestly, man, I just expect boring. I think we'll see, you know, certain little sectors pump for various reasons. If NVIDIA goes up, we'll see a little AI move again in crypto. We'll get some narratives here and there. But if you take a look at Bitcoin dominance, you just see that anything old that hasn't caught one of those bids from some very temporary narrative, altcoins have gotten destroyed by Bitcoin on this entire run up. If you're holding things that were kind of smaller and less popular and the last cycle, they're probably still down 95, 97, 98%. I do think that we will find things to trade and find moves, but largely I think go touch some grass and enjoy maybe your summer. If it changes, I'm wrong. That's fine. But right now I just don't see it.
All right. Well, on that note, I say we all go touch some grass, and
I agree.
We can end it here. But you guys, as always, thank you. I love the conversations, man. It's so insightful, and I think everyone watching, we have 17,000 people right now watching, which is pretty freaking amazing. So on that note, you guys have a wonderful day. Will we be, Scott, Mike, are you guys good for next Thursday? Are we good here? Will we be here at 3 p.m.?
Here. I'm here.
Awesome. So, guys, next Thursday, 3 p.m. Eastern time, come watch us again. We'll fill you in on the latest key data and information. Have a good one, and thank you, guys.